Hello everyone, here's my weekly update. I had for whatever reason a few technical problems where I couldn't get into the webinar jam with the correct menus, so I'm going to concentrate on what is normally my part of it. So I'm going to start off with the individual stocks that came through as signals and recommendations through the week. First one is Dollar Tree Stores, which is DLTR. And mentioned during the week that after the buy signal at the lows, there was a possibility of the weekly support moving to the bottom of the trend, which it has confirmed. So some strong support has formed. We still have a major barrier at 72.55. Next one in the same space was Rost. And we had a weekly extreme, which is that blue square, and this is also predicting, got to wait another week though, that weekly support will move to the lows. So this is 1 week behind Dollar Tree Stores effectively. One thing that would be interesting though is if it does move to the lows, it would open up space because there is no major levels anywhere near. Another one that one of our customers was looking at in the same space was Costco. On a relative basis, fundamentally Costco was more expensive than Dollar Tree Stores. But again, the weekly support could move to the lows, which is going to connect with a very long-standing line from a long time ago, and that would also open up space. So still on the watch list. Other things that were extremes was CCL, Carnival, and when you're looking for a sell signal as opposed to a buy we already know that a stock is beaten up, and if it's in an unloved sector like Dollar Tree Stores, Rost and Costco, one signal is enough. What we want when we're shorting is we need it to do it on the weekly basis, so it needs to actually close the week below. Carnival did it twice during the week but didn't close below, so everything's going to reset from the point of view of the semi-annual and annual levels. So if I was so from a range relativity point of view, it's now predicting the next month, the next quarter, the next semi-annual, and what that does is, because it's reset everything, it allows space, and so the market from a timing point of view simply ran out of time, and now it's got space to rally further, so it comes off our watch list. We're no longer interested. McDonald's, this closed the week below the key weekly level at 153.90. We've had some extreme signals as well, so that is actionable. Risk is very, very low. There is an initial target to 148.04, but then after that there's nothing, 131.96, so that is valid. Go on to a couple of the smaller stocks. We have AREX, AREX, which came up with a buy at the end of the previous week, and it had taken out the nearest resistance, which left space up to 428. Performed very, very well. I mean, the market had some big down days last week overall, and it didn't really go down when the market went down, and then if the market had an update, it rallied strongly. So no reason to change the view on that one. The first target is 428, so about another 50 cents or so. Another one was OSUR, which had a breakout. When you get breakouts like we had here, and then we've had another one here, you really want it to carry on accelerating, and actually its performance on Friday was pretty poor. It's come up with a time continuation sell, so we're going to have to be a little bit careful with that one. Also got Conoco, COP, which has been performing somewhat bizarrely really. When the oil price was going down, it went up, and then the oil price went up pretty much all week, and it's been going down. We've still got our reference 43.02, very strong support 43.26 to 02. If we close below that, we will take the medicine and get out. Semiconductors was the most loved sector for quite a while. Went up to number 1 and number 2. Stock's been on a storming rally, as you could see from the buy back in January when it broke out. And as we know, anything that's fashionable becomes unfashionable. And semiconductors dropped 8 points in the sectors this week. It's now down at number 18, so its fall from grace has been brutal and swift. And what happens, which is exactly the same as happened with banks when they turned, the falls are completely disproportionate to what the actual market's doing. So this is Skyworks. From the highs, it's down about 15%, when the market is not really down very much at all. It took out support after a sell signal as a continuation, and it's just continued to slide. So even when the market's had some recovery days during the week, it still hasn't really done very well. One of the real leaders was KLAC, K-L-A-C, and this has fallen nearly 20%. So quite often the ones that rally the most then fall the most, becomes the most crowded trade. We had the secondary sell, resistance move to the top, and we've just carried on falling. It's trying to form some minor support, but there's no change there. It's the same principle with the ETFs. So instead of taking individual stocks, you can trade the whole sort of area, as it were. It tends to be more smoothed out, and the falls won't be so brutal. This is SOX. Weekly went to the top. From its highs, it's down about 7 or 8%. So that's, you get the idea of how it's smoothed out a little bit. We do SMH. This did have weekly support at 83.13, and only if that level held during the week, and it didn't, which meant that the weekly support dropped again. From the highs, down about 10%, had a UFO as a continuation, took out support. 76.25 is the focus. The one to avoid in the space is XSD, because it's a completely different chart. It had a good run, but we had this major monthly support, and so we don't want to sell into what is a major level. It actually held the level, had a brief rally. We just about closed below it on Friday, but it wouldn't close below Thursday's low, so definitely not the one to trade. For people in the professional world, what they would probably be doing is they'd be buying this one and selling one of the other two, so that they had a balanced portfolio, as it were. Uranium's been in focus. It decorrelated from the dollar, so normally if the dollar's going down, then this goes down as well, because it's priced in dollars to a certain extent. So there's a definite correlation there. We've reversed and decorrelated. We've got one major level to get over at 225.25, and if we look at one of the stocks, we've got UEC, which has broken out, so it's taken out its monthly level, so it was actionable. 146 is the line in the sand there. We wouldn't like to see a daily close below there. There's also an ETF, which is URA, and that had a major buy signal at the beginning, the end of the previous week. It hasn't been in existence long enough to create weekly and monthly levels, so we're only going to get dailies. It's got to take out this 1334 point on a closing basis. FANG had a pretty wild week. We had the news on Google where they got a fine, although in reality it's a pretty tiny amount of their revenue. So we'll just have a look at that. And this is Facebook. Weekly went to the top. We had a pattern sell, and it's sort of gone a little bit lower. There is some decent support at 44.56. Amazon, probably the strongest of all of them. And what we can see, where it highlights it's been the strongest, is because the weekly levels going to the top is doing it later than what the other ones have. Pretty quiet. Firmly rejected 10.16 the week before. 927 is pretty important support. Netflix. Netflix held a weekly support, which has now moved to the top, so it's disappeared as such. We've had a time continuation sell, closed below 147.30, then it's in trouble. It was up 129.29. So that's teetering on the edge a little bit. We do Google. Google took out this weekly level here, was actually at the same level as the daily at 936.79. It took out the level and the support dropped again, and what we have here is space. The weekly's gone to the top, time continuation of UFO, down we go. There isn't much in the way of resistance, but certainly under pressure, no doubt about that. Finally, Apple. Apple's been trapped. The weekly was the first to go to the top, had a slam dunk. It's trapped. It held 42.20 pretty much perfectly, 142.28 on Thursday. Take that out and it opens up space, and what you can also see here is this monthly blue line. So it's at the end of this month, the new month, July. If we have not made new highs, which seems a long way away at the moment, then the monthly level is going to join the weekly, and that will reinforce the major topping process for this stock. Takes out 142.20 on a closing basis. Again, looks like it's in trouble. So there's the major stocks and some of the sectors. The other sectors I update pretty regularly as something happens in the ETF and sector section. Just going to look at the overall indexes. So starting with the Nasdaq, the weekly went to the top. This key level below 55.59. That is a major support. If we have another downward leg, we can rally a fair amount. There's not much in between. We've had a lot of volatility, so we fall very quickly, then we rally quickly, then we fall again. Tells us we're undergoing a tug of war between bulls and bears. One thing also on Nasdaq, it did not take out the weekly extreme. So if it had done, we would have got a blue square there, which didn't happen. S&P also wild, big down day, reverses, gives us a buy, then a slam dunk sell, then it's trying to build another buy again today, so we're very much trapped. The important point is 23.95 and a quarter weekly channel. Resistance is still minor, as it's only dailies. We do the Dow. Held the monthly breakout point pretty much perfectly. I think it was a few ticks above it in the end. So until we take that out, then we can't really get negative. It did post an extreme, so we did get some extreme signals. So until we take out that monthly level, 21.169, then we really don't. There's no suggestion that there's any real pressure on. There's another major level at 20,553. Just do the futures, just to see if it looks any different. And it does, mainly because major levels are just so far away, and we only have daily levels at the top. So the cash is what's dictating with that monthly level as opposed to the futures. Just do the Russell. The Russell moved the weekly level to the top. Again, a real wild gyration. It's got to really close the week out above there to say that there's another upward leg. But effectively, really, we've been going sideways pretty much for the whole of the year. Go on to Europe. Start with the DAX. 12,301. I think it stopped a few ticks above here. 2 ticks, boy. This stuff just keeps on delivering, really. So we stopped 2 ticks above that major weekly support. What I really like about that line is it's not obvious to the market. It's not referencing a high here, it's referencing something way back. And that really emphasises how powerful this stuff is, because nobody's going to know, apart from you guys and girls, that level's there. It's hidden, but it doesn't mean it's not powerful. Take that out, got a space down to the next level, which is about another 400 lower. We had the slam dunk sell. It can rally a fair way before there's any resistance, but keeping a close eye on that one. Euro stocks. Nothing's moved to the top of any significance. We did get slam dunk. Not really much to go on to there. If we got down to this monthly level, we'd be very interested in buying it. FTSE kept on attacking 73.15. I think it had 5 attempts at it. It finally gave way on Thursday. Then on the bounce on Friday, it went 2 ticks above the level, 17. Pretty quiet so far. We have space. Another thing to remember, I'm just going to actually type this out just so that nobody forgets it. Markets, oh, I'll spell it right. Markets reverse or accelerate around holidays. Big holiday this week, obviously, 4th of July. So the market's going to be pretty quiet today, dead tomorrow. It probably explains why there wasn't a lot going on Friday. So we don't take too much notice of any signals today, but we do get very interested in the performance on Wednesday and Thursday. Okay, that's like 15 minutes, so that's probably enough now. Okay, thank you.